Hello, good evening, fans. I'm sorry, you're not my fans, my followers. Here's our new channel. It's a SQL Server but unique approach because we are gonna tackle about database accounting through SQL Server. So, as you can see, open our SQL Server. By the way, I will create a different video which is will show you how to download a SQL Server. So this channel will tackle all of your queries about database accounting, which is usually not found in any book. So sorry for that. Okay, here it is. So we're gonna open our file. I'll just gonna make a run through of our file here. So we're gonna open what we call a query, a SQL query file. So here it is. I've named it DB General Accounting, which means that we queried the general accounting database. As you can see here in your screen, in the solution explorer, here it is. So we have a lot of things. So for newbies, it might be overwhelming for you. So we have here created table, but actually it's pretty much similar to your traditional accounting, but because of the syntax, maybe this is programming, so there might be a little things that you should familiarize yourself with. Now, so as you can see here, we've created a table, and then we have inputted the data. So as you can see, it's very familiar for you, especially accounting students. We have cash, receivables, etc. We have a table transaction. So what does this table transaction do? Actually, this is more like some sort of a control of transactions. Okay, so if we're gonna take a look at this, we're gonna query. So we query tables. Okay. Oh, I'm sorry. What happened there? Table trans. Why is it select? I don't know why it's generating some errors. Okay. So I think we haven't referenced the database yet. So we have to reference that. Okay, so once. Okay, so now we are in the database. So okay. So what happened earlier? We failed to execute this. So we need to use what kind of database. We have to reference the correct database before we can query it. So you have to learn to be familiar with the term query. We usually do that in SQL. So as you can see here, this is sort of a control. We have 1, 2, 3. These are all the transactions IDs. Okay, so you have the date, the time. It's the date time. But anyway, this is just a run through, so you will have an idea of what we will make in the future, the next videos. Okay, so we will join this, as we call it, with the general journal table. So the general journal table, if we're gonna query that, here's what's inside. So as you can see, if you are familiar with accounts, so this is a cash 101, 301 is equity 3, and we have here, if we look at again the transaction, that's purchases of merchandise, the second transaction, as you can see, and then the third transaction is sales, and the third is payment of expenses. Okay, so we will tackle here the concept of over reliance of computer generated reports. So what happened here is that if we're gonna do this, these are the foundation of your reports. Okay, this is the foundation of the reports. Okay, it looks like a general ledger. Okay, so we have a debit balance, the positive one, and the negative one is the credit balance. And then we also have here what we call the CTE. If we're gonna execute that, this is more presentable. So we have here 10,000 debit, so instead of the negative positive balance, it's pretty much similar to our traditional accounting. And the balance, we need to get that right for SQL purposes. So credit balance should be negative and debit balance should be positive. Now there are reasons for that. I will not discuss that more today, but there are reasons for that. But what I'm trying to drive at here is that in a computer generated reports, anything goes. Yeah, anything goes. So it's very important that you should know what's going on behind the scenes, because take this results or query, for example, the query results. We could just tweak some codes here, right? We just tweak some codes here, and it could affect the balances or the reports that we're gonna print out, our outputs. Okay, so for example, I will create something here where I will add 100 to each amount. Okay, so let's see, for example, this one, instead of we'll just multiply this by 2, and then also the debits here. Where is the debit? Okay, we'll also multiply that by 2. Okay, so you look at the results. Okay, so it's quite different, and the amounts are a little bit bigger, right? A little bit bigger. And the balance, we haven't changed the balance. You also need to multiply balance by 2. So as you can see here, there's plenty of ways to manipulate this, and these are the foundations of the reports. So one could say that auditing around the computer is almost not enough. Okay, So as you can see, the amounts are doubled. 20,000 minus 2,000 is 18. But it's just double because we multiplied it by 2. But actually, if you're going to look at the data behind it, right? If you're going to look at the data behind it, it's not the same as what's here. Okay, it's not the same. So things like this that I will discuss in this channel. I hope that you will subscribe so we can tackle more concepts in auditing theory and financial accounting in a computer environment, which is seldom discussed in a traditional way. Okay, so that's it.